I have just here my friend invite me to that group, so I would like to join and learn more from you and somebody about
Yes, yes, you're
to
welcome. You're welcome. Yes, just relax, not stressful. We study with fun and easy to take. Okay, so not yet stressful. I don't make any pressure to any members. Okay, just enjoy.
thank you. Yeah.
Yes, yeah. Okay. Uh, begin. Link. You can control your meeting today. Okay.
Okay, so I guess Miss Clara won't join us today.
No need. No, wait her. I will wake up her. You can go on. Begin. Start.
Okay, I will
Yeah.
share my screen.
Yeah. Okay.
S- See. Oh, wait. Okay, can everyone see my screen?
Yes, I see it. I see it. Yes,
Okay,
very basic. Very basic.
yeah. So, good evening, everyone. My name is Ling, and as arranged by Miss Huang, today I will present about the basic auditing. Hopefully, by the end of this presentation, you will understand what auditing is, why it's important, who does it, and how it's done. Before we dive into auditing, let's take a look at our case study for today. So, as you can see, this is a very long case study, and I'm not so sure if I can read it as perfectly as as Mr. Certain Surrender can.
Yeah, yeah,
So
yeah,
can you
Again,
please
yeah,
help
yeah,
again.
yeah,
me read?
yeah. I joined the call. Yeah.
Okay. Oh, so Miss Clara is here. Hello, Miss Clara.
Yep. Hi, good evening.
Hi. So we just start. My name is Ling, and I will
Link.
be the one who present our today's topic, basic auditing.
Okay.
So we will move to first. We will go with our case study for today. So can you see my
Okay.
screen?
Yes, I can.
Okay, so as you can see, this is a very long case study, and I'm not so sure if I can read it as perfectly as you. So, can you please help me to read this for everyone in our class to hear and to
Oh, that's a
understand what
lot.
is this?
Very
Yes.
long. You just
So,
And
Miss Lara, you
mhm,
just
mhm.
look around, and after that, you just make some summary. Okay.
Okay. So
Yes.
I don't need to
Work hard.
read this one.
Yeah. Work hard. I will help you. Okay.
Okay.
It's practice.
Should I read the paragraphs?
No, just
um,
summary, Lara.
Okay. Oh, I think for me to summarize this one, I need to read the whole thing. I think.
yeah, um, if it's okay, then can you read this one? I
Mhm.
think it's
Okay.
Yes,
Okay.
sure.
I
I
think
can
it's
see.
easy.
Yes. Okay. So Vera decides to set up a business selling flowers. She gets up early in the morning, visits the market, and then sets up a stall by the side of the road. For the first year, all goes well. She sells all the flowers she is able to buy, and she derives some income from the business. However, Veer feels that she could sell more flowers if she was able to transport more to the place where she sells them. And she also knows that there are several other roads nearby where she could sell flowers. If she could be in two places at once, she could achieve these two things by buying a van and by employing people to sell flowers in other locations. Vera needs more money to achieve this expansion of her business. She decides to ask her rich friend Peter to invest in the business. Peter can see the potential of Vera's business and wants to invest, but he doesn't want to be involved in the management of the business. He also does not want to have sorry. ultimate liability for the debts of the business if it fails. He therefore suggests that they set up a limited company. He will own the majority of the shares and be entitled to dividends. Vera will be managing director and be paid a salary for her work. At the end of the first year of trading as a limited company, Peter receives a copy of the financial statements. Profits are lower than expected, so his dividend will not be as large as he had hoped. He knows that Vera is paid a salary, so does not care as much as him that profits are low. Peter is concerned by the level of profits and feels that he wants further assurance on the accounts. He doesn't know whether they give a true reflection of the last year's trading, particularly as the profits do not seem as high as those Vera had predicted when he agreed to invest.
Thank you, Miss Laura.
Yeah,
So,
So,
the
so
question is,
mm,
what is Peter seeking?
okay.
assurance. Assurance to
Okay.
get more profit the next time.
Yeah. Okay. Thank you for your answer. I will ask some. I want to hear three more opinions about this one. I just want to hear opinion. I don't ask for the answer. So,
Who else? Who else can help Laura?
Miss Ling from Song Ngư
Ông
Film,
Ngư
can you help me?
or Miss Suran, Mr. Suran. Maybe you give one opinion and Miss Lin give one opinion. Okay, help Miss Lara because Lara is not the finance, he not the auditing,
Yeah.
just the teacher, English teacher.
So, Miss Ling, can you help me?
Sorry. So wait me 5 minutes. So I have the.
Okay.
I will back later. Wait me 5 minutes.
Don't worry,
Okay.
don't worry.
Okay. No
Okay.
worry.
So, Mr. Sung Nguyên, Miss Sung Nguyên, Miss Sung Nguyên là Miss Minh. That's right. Tuấn Đỗ,
Could
Tuấn
I
Đỗ.
could I
Yeah.
could I share my opinion of this question?
Yeah.
Yes.
Right.
Yeah, I think Peter is looking for someone who can audit the financial statement whether it's right or not.
Hmm.
Just
True and fair. Okay. True and fair. And he can trust. He trust
yeah,
the financial statement and the income statement
yeah.
forecasting. Yeah.
Result and profit from the
Yeah.
yeah.
Yeah. I think it's okay. One opinion, Miss Lin, it's okay.
Yeah, I think it's okay too.
Yeah. And second.
So, okay. Thank you all for your answers. We will come back to this case later. Now,
Yeah.
in any company, there are many stakeholders, people who have an interest in its success. These include owners, investors, creditors, employees, and even the public. Interestingly, the owners might not always be the ones running the company. They could be shareholders who have invested their money but aren't involved in day-to-day operations. So how do they know if the company is doing well or if their investment is safe? That is where financial statements come in. Financial statements are like the company report card. They show how much the money the company has, where it's coming from, where it's going, and whether it's making a profit or not.
Mhm.
But can we trust these statements? That is where auditing came in. So, Ms. Clara, do you understand this point?
Yes, I can follow.
Mhm.
Okay. So, for our case, the solution is that Peter is seeking can be given by an auditor that he or she can review or audit the financial statements. An auditor can provide the two things that Peter requires: a knowledgeable review of the company's business and accounts, and impartial review, since Vera's view might be biased. Auditing here is the systematic examination of the company's financial records to ensure they are accurate and follow laws and regulations. Think of it as a financial health checkup. Auditors make sure everything adds up and is reported fairly. Now, for this one, the purpose of audit report. Like I said, the auditor will make sure that the financial statement of the company is expressed in terms of truth and fairness. This is mean that the financial statements are factual, free from bias, and reflect the commercial substance of the business transactions. But this is just based on the truth and fairness of the financial statements. It is not absolute. The auditor cannot ensure 100% that the financial statement is correct, 100%. It just ensures that the financial statement is presented on the truth and fair, is based on the concept of truth and fair. Okay. So who performs the audit or the types of audit? There are many types of audit, but here I will make it clear in two types of by the types of auditors that are internal audits and external audits. Internal auditors are the people who work for the company itself. They assess internal controls and processes to improve operations and reduce risks. You can just think of them as the company owns financial detectives working behind the scenes to keep things in order. On the other hand, external auditor, these are independent professionals hired from outside the company. They provide an unbiased opinion on the financial statements, giving assurance to external stakeholders like investors or regulators. You can think of them as the referees, ensuring the game is played fairly. Okay, so these are the two of auditors, internal audit and external audit. Can you understand this?
Is there a possibility that a company doesn't have external auditors? Or is this kind of like a mandatory thing that each company has internal and external auditors?
Okay. So basically, this is just the term, the normal term. In small company, actually, they don't have a real internal audit department. They don't have it.
Okay.
Actually, the internal audit can be performed by an external auditor. They can just
Mm-hmm.
come into the company and check if their internal process are doing well or not, and they don't report such a report to the shareholders or the stakeholders, but only giving it to the management team to see.
Mm-hmm.
So the report, even the external auditor can do the internal audit service for the company, and they will give the internal audit report and for the management to review, and then they will use that report to change or to improve their internal controls or something.
Mm-hmm.
In my company, we also have a line for internal audit for Japanese companies, because Japanese company will have to follow a specific internal audit control G scope. I don't know if you guys know it yet, but every year Japanese company will have to submit an internal audit report to the government or to the government, so that they know that the internal audit has been checked in the Japanese firm. But many companies, they don't have the internal audit department, so they can just hire outsourcing auditor to do this for them.
Mhm.
Okay, I hope this clear your concern.
Yes, yes. Thank you.
Thank you. Okay, so basically, this is the auditing process. This can be used for external audit to check the financial statement of the year, or for internal audit control service. It will follow this timeline. Okay, so uh, this is a clear process that you can just think of it. Okay, the first step is planning. Auditors decide what to focus based on the company size, the complexity, and risks. They will define the scope and identify potential job spots right on the planning stage. Then they will conduct the fieldwork. This is the hands-on part. Auditor will test internal controls of the client, sample transactions, and gather evidence to support their findings. If they find that some controls are weak or they have some mistake in the financial statement, they will have to gather evidence and they will have to check whether or not the evidence they are collected is enough or they are complete or not. So you can think of it like a detective work, digging into the numbers to check to find out the issues. And next one is the reporting. Now the auditor will issue an opinion on the financial statement. We
Mhm.
have 4 opinions. So I will just go through 4 of them kind of quick. We have unmodified, means that everything's look good. We have qualified, means that minor issues found, but not very material.
Mhm.
We have adverse, mean major problems are detective, and we have disclaimer, mean that the auditor cannot unable to form an opinion because they are lack of data or documents. So the adverse and the disclaimer are quite negative for the company once they receive this. Because if you bring a financial statement that has the disclaimer opinion, means that they don't have the information to check if whether or not this financial statement are true or not. So if you bring the financial statement to the bank and then you ask for the money, there are high risks that the bank might reject it because they don't know whether or not the financial statement are clear or not. Because even the auditor cannot find any document to support this financial statement.
Mhm.
Mhm. And the last step we will have is follow up. Auditors will check later to ensure any issues are fixed, like, or are there any events that come up after the after the check of the financial of the
After auditing,
auditors.
after auditing. Yes.
Okay. Okay, so this is basically the audit process. So do you have any questions for this one?
Mr. Suran, your company have the auditors auditing service or something like this?
Yes, it's a mandatory requirement in all foreign companies to do audit once a year
Yeah.
through external party like ENYE or KPMG,
Mm-hmm.
Yeah.
and it's required for
Required.
compliance point of view.
Yes. After auditing, you submit audited financial statement. Where is it? Where to send it? The government or some of the where is it? You can
So basically, once auditing is done,
yes.
if it is a public listed company in the stock market,
Yes.
So based on the auditing or certified audited accounts, these financials are published outside part one. But
Mm-hmm.
the another audit which is internal audit. So
Mm,
on internal audit, if any issues or observation found by auditor, it is reported to management for the correction and the action areas by departments.
mm,
For external reporting, of course, certified, chartered accountant or the KPMG or ENY kind of companies, the
mm.
certify and we publish the report to external world. And for internal management reference, uh, that also happen parallelly once a year.
Mm. Okay, go on, Miss Lynn.
Okay. So, um, so before we have our Q&A, actually, this is the end of my presentation. I will move to my case study so that you guys can wrap up today's sharing. Actually, today is just the basic auditing, the very basic base. I don't want to make you guys feel nervous or struggle with this. So let's wrap up our today a little bit. So I have a case study here. My case is this for the Sunny Cafe's first audit. Sunny Cafe is a small family-owned business that has been operating for 3 years. They've grown steadily and now want to attract investors to open a second location. To build trust, they decide to get their financial statements audited for the first time. The cafe hires an external auditor to review their records, which
Mhm.
includes sales, expenses, and inventory. During the audit, the auditor notices some issues like missing receipts and inconsistent expense tracking. Sunny Cafe also wants to highlight its eco-friendly practices, such as using compostable packaging to appeal to sustainability-focused investors. Now, the question number one, what is the primary reason Sunny Cafe has commissioned an audit for its financial statements? I have A, B, C, D here. Okay. I have A, to enhance its brand image among customers. I have
Very interesting.
B, to identify inaccuracy that could undermine investor confidence. C, to reduce its tax obligation through expense adjustment. And D, to secure a guarantee investment commitment. So, uh, so I want to hear you guys' opinion on this. What do you think is the answer for this one? You can just chat in chat box or you can open your mic.
But Miss Lara, do you understand the commission? Can you explain the commission? Link in Miss Lara. Commission. Yes. Oh,
Yeah.
So, so Miss Lara, just one add-on
ah,
question.
Lara, you have the on mic. You turn off mic micro. Lara. Okay. Lynn, can you explain the commission? Commission that just hire auditor or something?
Yeah. Yeah. That just mean
Hire.
hire an auditor.
Yeah. Okay.
So, so
You
Clara,
can go to the chat box, Mr. Suraj.
uh,
Yeah, I just want to have one question. I mean,
Yeah.
is it only one out of ABCD, only one selection to be made, or it can be multiple selection also?
Multi.
if,
So, in my opinion, B and C uh, are
Mhm.
the reason where
Mhm.
this audit is necessary for internal
Mhm.
uh, uh, purpose.
Mhm.
Okay. You choose both.
B and C.
B
Choose
and C.
Yeah.
B and C. Okay. Everybody. Miss Lara, you turn on. You turn on mic. She have some
Oh, I'm
background with
sorry.
them.
Yeah. Okay. Yeah, is it okay now? Can you hear me?
Yeah,
Yes.
Yes.
yeah, I can hear you now.
Yes. For me, I would choose actually letter B. I think
Mm-hmm.
that's the main point why the owner decided to hire external auditor to to know the inaccuracies in the business, because
Mm,
it mentioned here that they've been on the business for 3 years, but this is the first time they will audit the their statements, their financial statements. So I don't know, but for me, I think it's letter B.
Okay. Okay. Is there any other opinion for this one?
who want to make the choice?
Okay.
Okay.
So, okay. So for this one, I just have a little bit about the option C, because option C, actually, yes, we will do have some expense adjustment, but
Mm-hmm.
only if the expense records during the year has been incorrectly
Mm,
incorrectly recorded into the accounting books. We don't actually we don't actually come to the company and then make expense adjustment. So the sometime maybe we will have to increase the revenue so that we don't really work for the reduced tax obligations. And it's because tax benefits are often not a primary audit goal. Yeah. So the answer is B, to identify inaccuracy that could undermine investor confidence. Like I said in the above, that the primary objective of the audit is to verify the accuracy and reliability of the financial statements, thereby assuring stakeholders such as investors that the reporting financial position is trustworthy. By identifying inaccuracies such as missing invoice or errors, the auditor mitigate risks that could deter investment, aligned with the cafe's goal of securing funding. Okay. Okay. For the next question. Okay. The question number 2. Miss Han, can you read this for me?
oh, that's no, Miss Lara. Mr. Suran. Mr. Suran can help her. Okay. Mr. Suran. Suran. Help
Yes,
again.
yes,
Yes,
yes.
yes. Okay. Thank you.
So
Okay.
question number 2 says that the auditor identifies a cutoff error where January 2025 sales were recorded in December 2024.
Mm,
At which stage of the audit is this discrepancy is most likely detected, and why? And the options are is and why it is significant. So options are planning, when risks are assessed; field work, when transactions are tested; reporting, when findings are finished; follow up, when prior issues are reviewed. So over to the group to answer.
Okay. Okay. So for Miss Clara, cut-off arrows, mm, cut-off arrows are a pretty normal cases for especially manufacturing company when the sales when the sales or expense are actually recorded in not in the correct period. For example, if they sell the goods in 2025, but they record the sales or they record the expense in
24.
2024.
Mm.
So it's gonna impact the profit and loss for the year. Okay.
Mhm.
So for this one, what do you guys think is the answer? Okay. Uh,
Who else in this group have the auditing knowledge? Who else? Hoàng Hiên. Hoàng Hiên is okay. Could you answer the questions?
you can just type in the chat box if you're shy.
Yeah.
Okay. So so I guess I have to invite Miss Clara.
Yes.
Okay.
For me, I think it's letter A.
Mm-hmm.
The planning part when risks are assessed.
Mm-hmm. Okay. Uh,
So yeah, I think so.
okay. So what do you think the risks are assessed here will
Mm.
based on what kind of information? Yeah, so risks are assessed, but what documentations that what information will we use to identify the risks?
Documentation.
Yeah.
Um,
Why?
I'm not. Yes, yes.
She asked you why, but because I just missing. She asked you why the Sunny Coffee want to make want to change for the sales from 25 to 24. You can you guess this?
Okay, that's actually confusing. Let me just confirm. Are you asking me how they detected the risks? So, are you asking me what documentation they used to detect the risks? Is that right?
Yeah, yeah. But I also
Okay.
think that Miss Huang question is really good. So hopefully that you can answer that too.
Yes, yes.
I think they were able to detect the risk or discrepancy by what they call this, finding out the missing receipts and the inconsistency of the expense tracking. So
Mhm.
that's how they found out.
Mhm.
Yeah.
And
Very challenging for Lara Lynn.
Okay. So
So,
so
Can I
for the
add?
plate, yeah,
May I add on that?
yeah.
yes,
Yeah. So basically, in such kind of um, wrong reporting of sales,
yes.
the first person is the sales manager or the head of business. When he
Mhm.
sees his business reporting, he will clearly tell in the meeting saying, "Hey guys, something wrong. This sales is is not correct."
Mhm.
And so in any subsequent business review, this mistake will be identified easily, and I'm sure finance team will look into and correct it. Another one is the fetching. When you looking the collection of the sale. So if there is a credit period of 30 days or 90 days, um, uh, the sales team in the ground, the customer will also inform, because when you are collecting money overdues, based on your sales reported in the system, they also knows that the sales is reported if in December, and if the credit days is 90 days, then they have to collect the money within next 3 months. So there are multiple ways, but I feel personally the first observation would be made at the sales manager level or at the business head. Uh, they will know that this reporting is wrong in the system and it need to be corrected. Normally, it's not happen. If it is manually done in the Excel, then it happens. But these days, all sales are reported by SAP or system. So chances of such errors are very less. But since this is a case study, so this is what I feel, from my experience.
Wow, you're like an auditor. Yes, 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 all of those are correct. But for me, as a little bit, if there's a case that you will see that sometime a revenue, it, you will see that some company will have this cut off arrow like this. So if the amount are material, if the amount is material, what do you think the reason why do they have to do that? For example, the revenue in 2025, but they recorded in the
Or
2024 profit and loss. Why do you think they will have to do that?
they have more profitable. Okay, the income statement more sexy and more profitable, and maybe attractive to the investor or some of the user reading the income statement. Is okay. That's right.
Yeah, yeah, yeah. Especially, and also there are many tech incentive for for the managers, if they can make the profits.
Yeah, I have
Good.
the bonus. Okay.
Okay.
No.
So
Normally, all these quarterly reporting. So, for example, December, let's say, is the quarter three in a financial year, for example. So, if the sales is normally some of the companies they saying that sales after, let's say, 27th of the month, if any sale is
yeah,
happening on 28, 29, and 30,
Mm-hmm.
yeah,
by default as a accounting principle, it would be, moved in subsequent month. And the reason,
Yeah, the
uh,
next
the
year.
reason, no, 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 no. The reason they give is saying that I invoice the billing from my, warehouse, but it is
yeah.
not received by the customer. So, for
Mhm.
example, if I'm a billing, let's say, product from Ho Chi Minh, and the product has to go Hanoi, and which may take, let's say, 3 to 5 days. So,
Mhm.
some companies have a kind of, principle in accounting saying
Yeah.
any billing happening after 27th, we will
Mhm.
consider only the sale next month, and that's normally not happen on every month. It's normally happen on the quarterly sales fetching, and as a part of accounting principle, and that's applicable in some of the foreign companies. I mean, you guys can tell that what from Vietnam principle point of view, but foreign companies do adopt such kind of practices to move the sale to the next month. If someone is doing intensely to showcase the sale, actual sale is happening in December and they booking in the January, trust me, the third party auditor like KPMG or EY, they will catch it. And this is non-compliant. It is not right. It's not a right practice. You're not supposed to do that.
Mhm.
Okay. Okay, I just want to confirm the situation a little bit. So basically, you're asking that you're move for the case that you're moving good in December,
Yeah.
then and they will receive them in January,
Mhm.
and they will issue an invoice in January. Is that
Mhm.
correct?
No. Invoice
Okay.
would be issued on the same date when the product is leaving your warehouse. So from Ho Chi
Yeah.
Minh, if the product is
Yeah.
moving on 27, the invoice without invoice, the product cannot go out. Question is if the recipient or your customer is receiving material, let's say in the beginning of the month.
Yeah.
So as a accounting principle on the quarterly phasing mean, let's say the financial year for company like us, it start from April, May, June is the quarter one, then quarter two, August, September, October, and then sorry, August, September, October, and then and let's say your financial year is closing in December. In that situation, anything happening still after 27, 28, as a company management and accounting principle, it will go only to the next month. in the
So
system,
I just
in
want to
SAP
confirm
system,
that.
in a SAP system, and even on the stock market reporting, you it is acceptable norms.
Uh,
Okay,
okay.
maybe just Mr. Suran company, they are the accounting principle and the company principle for to cut off the periods and that's very important, Mr. Suran. I understand this. So just follow the company principle and just make the decisions which the sales in which year. That's right, Mr. Suran.
Correct,
You have
correct,
the
correct,
standard accounting principle, and
correct.
you make clear the principle for everyone, and just follow this. That's
Correct,
that's it.
correct,
Yeah.
correct.
I just understand this. Okay, so the question very challenging, Miss Lin. I think we can discuss next week. Okay.
Yeah.
The next week we can continue more deeper auditing subjects. Is okay, everyone. So today just the basis and general overview the auditing. I think auditing knowledge very interesting and very important for the foreign company and FDI and the big company in the Vietnam. So we should understand this more. Okay. So anyone to ask something and discuss something? Sung Chu has the idea. Can you turn on the mic and discuss? You have the hand on. Sung Chu. Sung Chu. Okay. Okay. If no one have the question, we can stop here and good night. Good night, everyone. Yeah, thank you. Thank you, Miss Lin. Thank you, Mr. Suran and Liu Trúc, Hoàng Hiền. Okay. See you
Thank
on
you.
Friday. See you on Friday with the sustainability in the farming. Mr. Suran. Mr.
Yes, thank
Suran.
you. I
The
look forward. Thank you so
Yeah,
much.
the Friday, sustainable in the farming, by Miss Lang present, and next week, again Miss Lin, present the auditing. Okay, with this time the same day. Okay, so I will send the schedule later. Okay,
Sure,
so
sure. Thank you so much.
bye, good night. Thank
Good
you,
night.
everyone.